And welcome to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brett, the real estate guys, with you today. And thanks for joining us here as we head into the springtime. Well, it's still winter outside, but we're heading towards that slippery slope of March, April, and May, and some of the three busiest real estate months of the year. Joe, I like it this time of the year. They've got a lot of snow, got a lot of water going on outside, and a lot of activity in the real estate market. Surprisingly so, I think, although it goes up and down by week. It really does. You know, it's not the even every week out there in terms of new listings and closed sales, pending sales. They go up and down, but overall for February, it's a pretty darn good month going on.
We've had a couple, 3 winters now where we haven't bottomed out at least. There's been good activity. There's a lot of building activity. We're going to talk about that today. So there's some good things in the works.
Well, today in the real estate show with us is Giles, who of course is our expert from Bank 34 Mortgage. Talks about mortgage interest rates. He's a guy of all sorts of I'll say trades, but all sorts of interests. You're on the marijuana committee, I know, with the sheriff, right? And that you deal with lots of veterans. He's a horse guy. I mean, he's moved. There's all sorts of things. Anyway, how are you doing?
I'm good. Just busy for I almost said a January. It kind of feels like it. I mean, we're just moving through this year fast already, but I'm getting a lot of people coming in the door, getting pre-qualified, a bunch of veterans coming through, and we are busy.
Seems to me there's a lot of people looking, and a lot of people getting very smart by getting pre-qualified. Correct right now? I mean, that's the key, because there's still a lot of activity. Okay, go ahead.
I'm also going through and just getting them to get me all of their stuff. I'm putting them through underwriting, so it's just a little bit of an extra step to be completely underwritten when you're writing that pre-qualification letter. So, and it's not really a pre-qualification at that point; it's a pre-approval.
It's a pre-approval.
Yeah. So if you're in one of those markets, some of them, like the higher end stuff take a little bit longer, but if you're in one of those ones where it's really competitive, it's good to have every little challenge. Or every little edge that you can get.
And we're still getting competitiveness here. I mean, don't think that all of a sudden the market has just changed so much. So we talk about it normalizing, that you're not getting multiple offers. That's not true. They are still out there, especially in certain price ranges. Remember that.
275 under 250. It's really competitive when new good properties.
Well, over here in the middle also is Brock Scott, who's the owner of Elite Developers. And Brock, this is Brock's first time on our show, so welcome first of all to you. And
I'm happy to be here.
Thanks for being here. You grew up around the valley here, so tell us about you grew up in Gold Hill?
I grew up in Gold Hill, local boy. I went to Cascade Christian High School.
Yeah? So how did you get into the construction business? Did you start? Where did you learn it? I guess, Brock, for people, because we always talk about we don't have a lot of skilled guys out there. So where did you learn the trade here?
I came back from college, and like every other kid, I needed to make some money, needed a job. So my uncle, actually, Mark with Vision Homes, he's a local builder, and worked with him for a short period of time, and he kind of taught me the trade and taught me, how to build a house, how to
build a house.
Yeah, basically, and realized that it was something I could go do on my own, and started building that first house. It got about 3/4 of the way done, and you know what? It sold.
It sold.
And it's like, well, guess we'll build another house.
What was the first one you built? Tell us about the first one.
So oh boy, it's been a while about, but that house was about 1,600 square feet. It was a 2-story house. Something that was an open floor plan, a master bedroom downstairs, walk-in shower.
Did you design it?
I did not. That was the process that we sat down when we built that first house and kind of talked through on, having an open floor plan, having something that is, reaches the most audience of people.
Sure.
And it was a house that apparently I built several times since then.
Sure.
And
what did it sell for?
So at that time, that house sold for like $290,000.
Okay.
It was in that lower price point. That's when lots were. Man, we were buying lots for like $35,000, I think then. So,
Well, you got to when we started. Yeah, when we started our this show in July of 2009.
Yeah.
There were more sales that were short sales and foreclosures than there were regular sales. So, and lots. Remember we talked about that? Yeah. You told us we got involved with you. Lots were so cheap. it couldn't give them away then, could they?
Well, and it was a great thing, actual time to start, because you had to really sharpen your pencil to make any money at the end. And, you know, that looking back now was such a huge thing on, you know, we had to be really careful on where our margins were and what we were doing. And then, you know, as the market kind of got hotter and grew, it went from there.
And so here we are. Okay, we're February of 2019. You're busy. Tell me what tell me how you're doing.
So,
what's going on?
We mainly are doing pre-solds right now.
Pre-solds. Okay.
Not really building any specs anymore. Have gotten to the point that the phone rings enough that we just work off pre-solds.
So when the market changes or turns, so just right now then, what I heard you say, when that market changes, you go from the spec homes where the builders are building the spec homes hoping to sell them to where buyers are coming to you. I want you to build me a house. Here's the money. I'm ready to go. Right?
Exactly.
Well, that's got to be good for the builders.
It is. It's great. You know, it's that guaranteed work, and then you know, being able to partner with guys like Guy that go in and get them pre-qualified with him, and then go and build them a home.
All right, it's a good segue into you. How we, you know, I don't do a lot of construction kinds of things. I mean, it's not something that people sell different what's. Yeah. So what do I have to do to get that those construction loans that are out there, or what's the difference from a regular loan guy that someone would have to go through?
Well, you basically just have it appraised like it's an already done house. You'd have your plans and your specs and just everything, kind of your cost worksheets and everything out there ready to go. And an appraiser would actually act like it's an already a done deal. So they'll look at it like what's that value going to be once it's built and when it's done.
Even before it's built. Really? I didn't know that.
I didn't either.
And that way, you know, these guys get money throughout the process rather than trying to fund the whole thing themselves. And so it kind of works out for everybody, especially if you want some things done to your house. If you want to have, you know, a crazy pink chandelier or something, nobody wants, if they're financing that, they don't want to put that in the house in case you back out and all of a sudden they're trying to sell this crazy whatever it is you liked. But it kind of works out for everybody.
Well, you know, in the area here, in the latest SOMLS stats of new homes, okay, that were built and sold, in that 3-month period from November, December, January, 2018, 2019, kind of the period there, it's almost the same number, 67 homes. That's about, not 20, 40, 60, a little over 20 a month, I suppose. They're generally built, though, when you say probably over half of those are built in East Medford. Isn't that interesting?
That's where most of your stuff is these days, right? You're still doing a lot in Larson Creek, or
East Medford, and in that Cedar Landing subdivision.
Okay.
Over in Twin Creeks, and then, you know, we have the variation that are spread throughout the valley doing custom houses on people's land. But
I didn't even know the neat stuff you guys had going on over there with all the walkways and the stores. I guess there's going to be a restaurant put in there. I mean, I don't think there's any other kind of a thing in Southern Oregon like this.
Where are you talking about? What?
The old Cedar Links.
So he probably
at Cedar Landing, you mean?
Tied
Cedar
into
Landing.
It is? What are they going to do?
The city is developing some of the old cart paths as walking trails tied into the master plan.
The old golf paths.
Yeah.
Oh, really?
Yeah. No, it's a really cool
if those paths could tell tales.
There's a lot of Medford history has walked along those trails over the last 50 years, haven't they? They really have.
Chapter.
Well, I was just driving. If I was showing some property up there, I didn't know they were going to do that. When is that is that happening now? Is
I think it's within the next couple of years they plan on developing that.
And I mean, I guess they're going to have a little grocery store in there. They're going to have a little
coffee shop.
Right.
Just kind of everything, so you can walk your dogs.
Cedar Landing new homes. What are they going for? What are they building in there?
You know, you're building a house that's from 1,800 to, I'd say, 2,500.
25, that big. Okay.
And going from 400,000 all the way up to 6.
So that's the range in there. Now, Twin Creeks, tell us what the ranges are there. What are you building in there?
Twin Creeks is more probably 350 on average, all the way up to, you know, there's some really large lots. There's smaller lots and large lots. So you can have a house, you know, a block from each other. You could have a 1,300 square foot house, and then a block later, you could build a 4,000 or 5,000 square foot house with some big pool.
You could?
Yeah.
Really?
It's a cool subdivision. That's actually where I live. That's where.
Yeah. Okay.
And
so you know he's going to build you a good house. You got to live with him.
So, but it's great because there's a mix of, you know, there's kids and there's lots of parks in there, and then you know, there's also it's really close to the fire station and everything. So there's older, the older generation in there.
Yeah.
We do the aging in place houses in there. So
yeah. That older generation, that's my world there. I know what you mean by that.
You may never have to move out of Twin Creek.
You can live your whole life right in Twin Creek.
Much younger man than we are, but you see that play out. And that is really neat development. They're going to connect over to the high school. They're going to get across.
I've seen a tremendous number of looks like new lots being developed along the railroad tracks there, a part of Central Point there. I know it's farmland, and I cringe at some of that. When you see it, but I guess it's okay. But we got to have that. Yeah. Well, we got a break coming up here in a couple of minutes, and we're going to talk interest rates more with Guy here in a bit. But I also want to ask, since we have Brock with us from Elite Developers, is what else is out there that people are building and things? Because cities are making it easier to build small homes, additional dwelling units. I mean, I see the potential for builders in selling and stuff. Tremendous potential. Do you see any of that out there? Tell me what you see.
I do. The city is really, trying to develop and getting the houses caught up with how many people are wanting to buy them. And with that, they're doing a lot of duplexes, a lot of fourplexes, which is nice for that, younger generation. You just graduated college, just got married, and want to start that first house. That's a great option for them.
It is, yes.
You're able to own something and don't have to rent, but then it's a good transition. Lots of that going on, and then that there is a lot of the influx of people moving up from California.
Absolutely,
that's probably more than 50% of my work is from people moving
you're
up.
not. What you're saying is you're not far off. The statistics, remember, show that 40% of sales in Jackson County are from people other than people who live here. The other 60% are people moving up or down in our own communities. That's 40%. If there was 2,500 sales last year, that's how many new people. I mean, think of the numbers. This one just blows you away when you start just think how many new people have come here. Are
you screening them carefully? Are they good additions to the Rogue Valley?
There's all kinds of people. Let's say that.
And they aren't they? What you see.
We meet them all in real estate. Trust me.
You see older, retireds, and families.
Yep. That the young families and then retirees and then middle age, all over the board. So
in housing, and they all need housing. And so it's I still think we've got a break coming here, but I still think we're going to see. The trend is going to be to smaller and smaller and smaller. I just think it is.
Too. Yeah.
You're not going to see these lots. Remember when Ashland sells their first mini lot with a house on it with a little half-up small things on them, that's going to start that trend, and you're going to see smaller divides and smaller lots.
I had somebody get pre-qualified on that house. It's 600 square feet for, I think, $278,000. She's coming down from Portland.
Wow, really?
And we're calling an appraiser just to make sure that thing can comp out, because it's like, what are you comping against?
Geez, I could live in Ashland.
I was going to say, $278 for 600 square feet. How big was the little lot?
It wasn't that bad. She was actually trying to find out if she could actually add on an ADU onto this thing, too.
Oh, well.
So, and supposedly it's legal on there.
That's what you call due diligence. But yes, I mean, it seems that you should be able to do lots of things with it. But again, builders have got to be able to build those things. And I don't know if builders are really so much into that. We got a break coming up here. We're with Brock Scott from Elite Developers, our good friend Guy Giles from Bank 34 Mortgage, Pete and Joe, the real estate guys. We're coming right back after this. And welcome back to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brett, the real estate guys, with you today. Thanks for joining us here on radio and, of course, on YouTube as well. Joe over there running all the YouTube stuff as he does here every week. Don't forget you can check out any of our past shows at realestateshoworegon.com. Next week, by the way, Daniel Perry's going to be here from bookairhop.com. We're going to talk about vacation rentals, because it's that time of the year. And we've talked about that with him for several years now, and how his business has grown and how many people are taking advantage of investing in short-term rentals. Anyway, we'll get into that next week. Today, we're with Guy Giles, who's here from Bank 34 Mortgage, and Brock Scott, who is the owner of Elite Developers, who started his own business and is doing quite well with it. And it's really great to hear. We've met several young people, I mean, compared to us, like Brock, who are in the business. They're building. They're the Rips.
Yeah.
So there's several people doing what you're doing, and that's really good because you're going to be great ahead for you. Oh my God, it's just
Tim's
really cool.
Great things, yes.
Anyway, let's talk about mortgage interest rates for just a bit here with Guy. Okay, they've come down
because then I need to ask some things about the UGB expansion in Medford and who's getting into all of that. We got to put that because I bet he knows things that we don't.
Really? Okay. All right. Okay. Sorry. Okay. What's going on? Is it the stock market? Why? Personally, I think it's great that they have not risen. Yes. I mean, it would be bad for everybody if interest rates went to 5.5%, 6%. They're not. So what's going on?
Well, they're actually going down. It's funny. I actually had a construction one that I was dealing with today, and I looked back at what we disclosed the rate at, and I was 5/8 higher back then than I was right now.
Wow.
I mean, it's amazing how much they went down, and these poor people, I disclosed to them with that rate then, and the house wasn't done. So, I watched rates, and if they were going to go way up, I would have locked them in. But I've just been watching them, and they've been creeping down, so I haven't done it. And now we're getting towards the end, and all of a sudden, we're looking at a low 4% rate for these guys.
Good on you. You didn't lock that then. You
I try to
kept a good eye on it.
I try to watch this stuff. I invest a lot of money into watching the mortgage-backed securities and seeing what's going to happen. But
is there a difference between a new construction loan and a regular 30-year loan? Is there a difference there?
Potentially. I mean, there are companies that go and they'll do what's called a takeout after it's done. So they'll close the loan and then do a separate loan. We look at it like it's just an all-in-one. So the loan that you lock in at the beginning is the same one that you're going to have at the end. I mean, a couple cool things that we have on that is the cross-collateralization. So if you own, you have equity in your house. There are some ins and outs of that.
Yeah.
But you can use the collateral on your house, build a house, stay in your house that whole time, let it appreciate.
You can use a cross-collateral loan then for new construction as well? Yeah. I didn't know that.
I can do that. I can do VA constructions too. I don't know really if anybody else around here doing those.
I mean, the reason is I think it's so important right now, these cross-collateral loan, if you're interested, is that we're just seeing lots of contingent offers. My goodness. I mean, I've got like 4 of them. Contingent offers, contingent on somebody else selling the house to sell your house, etc. And I always think back to Guy and talking to us about a cross collateralization loan that may solve that problem for you if you meet certain parts of it.
And truthfully, it's not for everybody. I had somebody the other day that was very, very loyal to their lender, and it was a realtor that was trying to have him talk to me, and I said, don't do this. Just do whatever's best. They ended up dropping the price more than the fees were for the cross collateralization loan. And anyway, at the end of the day, it would have been a much lower rate because our rates are really good on those, and they didn't have to sell their house for less than they wanted to. And it's not for everybody. Don't get me wrong.
I understand that.
But in certain circumstances, I've closed a few of them, and they're actually kind of a cool alternative.
What a great alternative for new construction, though, and live in the house you're in comfortably until the new one's ready for you to pick it up and move.
Do you see many 15-year rates anymore? Do people ask for those? I mean, do you ever see that much anymore?
Not a ton. I mean, you will save a lot of money by doing the shorter term. There's no doubt about it. A lot of our people that we deal with are the higher end people. They do understand the value of what you pay on a 15-year, but you're also going into your years where you might be on a fixed income. I've had a lot of people come to me later on and say, well, now I want to refinance my whole house because I don't want the high payment. And so you can accomplish a lot of the same thing by making extra principal payments to your mortgage. And then if something happens, you got to pay for a kid's college or save for something, you can just back off of that. And I don't want to ever say that a 30 is better than a 15 if you can afford the thing. But at the end of the day, life happens. And if you got somebody with young kids, as they get older, you're going to learn this, buddy. So, anyway, as they get older, you're looking at braces, and you're saving some money.
Horses, horse trailers.
And what about
that's a sore subject, buddy.
Barns?
What about down payments? The most amazing stat. Jim Remley from John L. Scott was here a few weeks ago, and I think the most amazing stat stuck out with me was 49% of the renters in this country believe it takes 20% down to purchase a home. And 20%, that's not the case. What is it today? I've heard 5%. What's the average is like 5%.
Yeah, well, and if you buy something right by the freeway, there's little zones where you can do the 3%. Other than that, you have to make about $58,000 or less.
Okay.
Then you can do the 3% down. That's a Fannie Mae program. That's pretty good. And if your credit's in good shape, I try to put people towards that rather than an FHA, because anytime you have less than kind of the 20% thing comes from, if you have less than 20%, you pay mortgage insurance. And it sounds great. I got extra insurance on my place, but it's insurance that covers the bank in case you default on your loan. So you don't really get a worse rate by having that, because that's an extra layer that that is underwritten that keeps your rates pretty good. But at the same time, it's just it's money that is tax deductible still, as long as you're. Anyway, it was in the low 100,000s that you could still write it off. I'm not a tax guy, so I don't want to give advice on that, But yes, the regular loan, low down payment loan, is the FHA, 3.5% down. But the Home Ready's at 3%. Yeah.
But remember, you're going to have mortgage insurance with those, right? And that, of course, I'm dealing with clients who, do we put that 20% down and not have that mortgage insurance if you can afford that? It's all those kind of questions. But remember, that mortgage insurance really adds to that payment sometimes to that, and for the life of the loan, right?
Yeah.
Still,
well, on the FHA, yes, unless you have 10% or more down. So
10%
which then we'll try to put you into a conventional loan anyway. So
at that point, yeah.
But there are good alternatives. If you don't have a great credit score, there's nothing that could beat a FHA loan. I mean, the mortgage insurance, it's capped at just the 80 basis points, and you're just there. So if you have a poor credit score and you're doing a conventional loan, it could be the difference in paying $110 for mortgage insurance and $350 for mortgage insurance. I mean, it's really good to come in and just talk about your own situation, see what's the best.
And hopefully you'll do that, because again, everything varies. There's less than 1,000 listings right now out in the MLS. You know that? Isn't it funny? We went through this for years. There were less than 1,000. It's got down to 700 once. Then it went up over 1,000. Dropped back down. Supposed to be more listings coming up. What's going on with that? Huh? What do you think?
They're prepping.
I think they're prepping. This week in the Ashland meeting, there was only one, and that was a re-list on the board. That big board we have. You get those people up there. One.
That's a pretty lonely board.
It was a lonely board. It was what's going on. Well, I think there was quite a rush of new listings that came on. In fact, we keep stats of what happens every week, in the listings. There were 73 new listings that came on last week in Jackson County compared to 45 the week before. I think kind of people pushed them up, and now kind of they're already out there. But that's maybe the thing there. Pending sales, by the way, were down 74 to 55, so it was down. Closed sales, a lot of closed sales, 57 last week. So a lot of activity was down all across the board, though, in Josephine County. And talking about the luxury home market. There's several that have sold, but they're rural residentials, not necessarily in town, because the stats that we give you a lot of times represent just residential sales and not ones out in the country. So, but there is activity going on there. Well, I don't know where this is all going to go, but there's a lot of something going on.
Yeah, well, I mean, I'd say go check him out. I mean, that's one thing that I hear a lot from people. I had some first-time home buyers today that were, kind of what goes into buying a house. Well, if you buy an old house, kind of a roof might go into buying a house, or a new heating system, or your rugs. And if you go in, a lot of times it's really not going to cost you very much, more or even less sometimes to buy, to get one built.
How green are these homes that you're building today? I mean, we hear all sorts of stories. In California, you're going to have roofs are going to have to be solar panels, in the beginning of 2020. Yeah. That's coming here too, as you know that.
It is.
What are you building? I mean, how are you building these things, or what's going to, cost-wise anyway?
So, we're putting the maximum amount of insulation we can fit in the walls. That's one of the biggest things to me, because it does, reflect on your utility bills and everything, and the efficiency of your home, There's a bunch of different tricks. The biggest thing is just getting the house as sealed as possible. Because when people talk about green homes or being energy efficient, it's when you lose air and your heating systems and your electrical are having to work harder and harder instead of having just a well-built sealed home. Because the codes and everything read that you have to have certain efficient heating and air systems already. And Oregon is one of the strictest or most has to have the tightest laws on what we're putting in there, which is great. I mean, it is great to put systems that are, very efficient, but that's the biggest thing to me is just getting those houses so sealed up and put as much insulation.
Now that sounds like a net zero home.
Yeah, exactly.
And that's where we're going, aren't we?
Yeah,
with new construction.
we are.
And net zero homes, Joe, have you ever seen those where they have to have they're so tight. Mm-hmm. You have to have air transfer. You have to have air to come in, right? Isn't that what that works? That's how efficient they are. But you're right. You're going to see that more. Well, it's coming.
So
whatever.
I was way ahead of the game, is what you're saying, because I had those kinds of things in my old house. It was just called the gaps in the doors and all of that. So you never worried.
You never worried about that.
It was cool.
That. Yeah.
But I'll tell you what, there's something really nice about just being in something, like I said, new, that you don't have to worry about a roof. I've always lived in older houses, and I kept my older house as a rental and moved into a new house. And it is just, it's night and day as far as the electricity bill, everything. And I don't like a lot of the environmental stupidness that comes out of Salem. Don't get me wrong, but having a nice airtight house is kind of cool.
Well, I think we're going to see them. I think the public's going to demand them that they build this way, and but it may require smaller homes. That's what I'm saying compared to the larger homes that maybe not have some of those features. But so you have to become an expert pretty much in that whole category of a builder. I mean, when you want a builder, you want someone who knows this part of it.
Yeah,
I don't even know what they all talk about.
Net zero, all this kind of stuff.
Well, I've had 3 or 4 people that have gone down and talked to him, and didn't tell you this because I didn't want you to get a big head, but they are just completely impressed after they meet with you about the whole building, and he really does know his stuff. So
I'd spend quite a bit of time, after hours and stuff, researching and reading articles about it. Just because the way of the future is going to be so much different than how they used to build houses. And, I'm the younger generation, so I'm trying to get, hopefully I'm going to be doing this.
You're trying to get ahead of the game, but you're trying to get ahead of the game. It's smart for you. We got a break coming up here in the Real Estate Show. We're talking today with Giles from Bank 34 Mortgage, along with Brock Scott from Elite Developers, Pete and Joe, the Real Estate Guys. Check out all of our past shows, realestateshoworegon.com. You can sign up for our weekly newsletter there as well. We got a break. We're coming right back. Our final segment after this. And welcome back to the Real Estate Show here on KCMX News Media 880. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. Next week, we'll talk a show on vacation rentals, so investing properties. That's something you want to talk about. We've talked about that a lot, and we'll do that next week. Daniel Perry will be here, and we enjoy talking with him. He's
talk about a burgeoning business and one that's been neat to follow and follow the growth of that industry.
I was going to say, we talked about our guest here today, and Scott Brock, about he built his business. Daniel built that business from Zip 2, So look what successes. Jeez, it was going to rub off on us or something. I don't know, but that. And Guy Giles is here from Bank 34 Mortgage. So you're saying, here we are in February. Rates, good rates. You're happy with that, and you're busy, and that's the important thing.
Yeah, and like you said, there's probably more people looking than I actually show in contracts.
Sure.
I'd like to see a little bit more, people actually in contract. But there's the China thing's probably going to be the next big deal as far as the rates go. The economy's slowing down in the world a little bit. We're due for a little bit of a recession. It's not going to be bad. I don't know of anybody that's saying that it's going to be bad or it's going to be deep, but we've just been growing for a long time. The country
still has room to grow, though. Too,
yeah, and once we get some sort of a trade deal signed with China, we could get a little bit of a bump in rates, but I don't think they're going to be bad. I think the Fed sees this as a pretty decent environment that they've raised things up to about where they want to go. So we're not seeing in the foreseeable future that they're going to be doing.
I think that's really good news. Brock or Scott, tell me about how you get into these building materials. They were going up in price. We just heard horror stories from everybody. What's happened with building materials for you right now?
Building materials have settled a little bit, but there was a time there that I would I do about 50% of my work is commercial work anymore. So we do commercial where I would bid out these jobs, and we'd get towards the end of the job, and I'd have to go back, and the cost of PVC, for example, pipe, it almost doubled in a year. It just, same thing with lumber. Lumber packs, I was looking back, we just did this a few months ago on what a lumber pack was when we first bought it compared to what that same house, because a lot of times I build the same floor plan, so I have really good data to go back and look.
Sure.
And rose 25% in just 2-3 years. Well, that really, you got to sharpen your pencil.
Insulation. What insulation? Same thing?
Insulation is a pretty steady. I mean, it's gone up a little bit, but the percentage of what insulation costs compared to lumber is, not as significant.
Well, just know that Roseburg Lumber, they're sending trainload. The trains that come through here heading southbound, they're all going to the California recovery.
Yeah.
They're working those plants up in Dillard and Riddle 24 hours a day.
Yeah. And it was natural disasters, the big hurricanes and things that really started the shortage in the first place. We got really behind. We had so much damage and billions of dollars worth of damage.
Santa Rosa fire destroyed an insulation plant, from
Houston,
Libya, I think it was, whatever.
Texas,
all the stuff that went on, and we just hearing stories about that. What's the biggest challenge facing builders today, would you say? I mean, you've got a lot of rules coming down, when you think about that, but what else is out there?
It's like a lot of other people say, the workforce. As of my employees and subs, I look around and, I have these great guys around me, but man, they're 40, 50, 60 years old. And I go, well, in 20 years, who's going to be building houses? I mean, there's a couple great young guys that, I've had the opportunity to work with, but the reality is that it'll be very interesting to see what happens in the next 20 years in our workforce around here in construction, because everybody seems to be that older generation.
Does is Road Community College listening to this?
I hope so.
Are the school people listening to this?
Builders Association has been trumpeting this need and this
the need for skilled labor.
We've got to expose kids to the opportunity. There's some great family wage opportunities and jobs out there.
That's
in our trades.
So true. I mean, that there's a kid that started and working for the plumbers that I work with, and he decided not to take that college route and just to be, a tradesman and a tradesman, and sitting down and talking to him on, if you're a plumber, electrician, a good framer, you can support a family. You can have a great lifestyle, and our society is just so much, go to college, go into so much debt.
Go be a computer programmer, and it's not for everybody.
And
you're a great example. I mean, look, you started your business, and you're not facing anything that we haven't heard from other people in our shows, that the subcontractors are simply not there, and the guys who are there are all older, and they're going to retire, and who's taking their place?
I got to think there's tons
of
young men out there that would enjoy that aspect of building and working on a team and building homes. It's a really neat process and some incredible skills.
I've often said I miss that when I used to do construction. I'd drive around and you'd see the things that you actually built in town, and it's a nice thing, and especially like with him, he's successful enough, that it's one of those deals that he doesn't have to sell a house to pay his mortgage or something. So I've always seen him just do what's right by people, and it's just really refreshing, and that's why I kind of surround myself with a couple people like that. But I've actually had a herd of electricians moving here from Arkansas that called me last week, and the husbands are driving down right now. They're probably 15 hours away from here, and the wives will be following them, and they want to come and be electricians here. They're already doing it back there, but
there's nobody here, and supply and demand, it's here. The prices go really high, when you call somebody and things like that. So we've heard certainly nothing that we haven't heard, it's nice to hear a little bit of development there, but gosh, I hope these schools do it too.
I've got family in Arkansas, so this should be interesting. They're going to bring some fun with them.
Right on.
They're like my family.
All right. Well, we'll just that's okay. So back to rates. We're good. VA loans. I think I know you do a lot of those.
I do. A couple more today. So they're just a great loan. I mean, if you have a good down payment and you don't have any service connect disability, we might look at a different program. But for the most part, they're just a really good way to get in if you don't have a big down payment, and no mortgage insurance no matter what on those, and the rates are really good.
I'm guessing these are younger veterans from our more recent
This guy was
campaign.
Today, his wife was 27. I haven't looked at his stuff. My assistant was working on it when I left. But
I think we forget how many there are still in the ranks and coming through and ending their military careers and have earned those benefits.
There's a lot of people who are downsizing, as you know, trying to find alternative housing, very difficult, as you know, and where are we putting all these people that are coming? Not everyone, as you build your homes, and stuff like that, not everyone wants those. We need smaller places for people, single things. The demand is changing.
$278,000 for 600 square feet. I could live in Ashland. I never would, but I could. That's my first option I've ever seen that might work there.
Yeah, if you look it up on the MLS,
I'd only be able to take one dog and probably not
yeah.
a bunch of
tiny homes. I mean,
try 7 horses.
I still think tiny homes and additional dwelling units are where we're going to go. Yep. It's going to be smaller and smaller lots.
Got to be
affordable. Go into East Medford, the new lots they're building over off at Clear Creek, Creekview up in that area up there. They're tiny lots. And so we're getting smaller because prices and costs and trying to get
land,
as many people as we can into these places and infill. As we're doing that in Ashland, they're trying to do that in Medford. I think we're going to see more of it. So you have opportunities there to add some more value to your property by adding something to it.
Franklin Place there that the Ripsums are doing on Aspen. Those are 23 lots in a very tight space there. But the dirt is already pending on some of those.
Yeah, some of those were bought a long time ago on some of these places and hold them, as we heard here from.
You got a lot of dirt in East Medford and Central Point, but if somebody has their own land, you can build them something.
We have lots in Twin Creeks, we have lots in Medford, and then we do a lot where people just buy the land and we help sit down and design a floor plan with them and
here we go.
Build their house.
How can someone get a hold of you, Brock, if they need to?
The best way is to go to our website. It's elitedevelopers.com, and then or just reach out to me at brock@elitedevelopers.com.
Okay, well, that's easy to do, right? I can do that right there. And we will be seeing you soon. And of course, you're a good guy and busy guy, and so keep up the good work, right?
Dude. Yes.
Keep those interest rates low. As long as those interest rates are low, you and I will get along fine.
Take care of our veterans.
I'm doing it.
You just don't raise those rates, okay? Keep them where they are or lower. That's going to do it for the Real Estate Show here today. Thank you for being with us. Thank you, Brock. Nice to visit with you and Guy as well. Joe, we'll see you next week as well. Check out any of our past shows at realestateshowOregon.com. Have a great week, everybody, and God bless you all.